What's the biggest thing you'll be watching in financial markets today?
First of all, thank you for having me on. I really appreciate being a part of the show throughout the year. It's there's a lot of market drivers we're looking at going into next year, and a handful of them, and it's kind of the common theme. But mega cap AI earnings, rates and inflation, some market concentration, and then the new regime with Trump and some of the policies there.
When we look at a name like Apple, how much can one stock move the overall market or even just shift sentiment as we look at the NASDAQ, up 33% this year? But there has been this broader debate about whether we will start to see this rotation out of the Mag 7 names and into software, cloud providers, specific sectors that could prove to be a good promise for 2025.
Yeah, we're all aware the S&P's concentration at the top. It's in the 99th percentile, the highest 1% of all time, really due to the Mag 7 name. So, if you're investing in the index itself, we say look at equal weighted index funds or just sector weight in general. But, Apple is trading at 41 times forward earnings, which is that's the highest since 2007, and the price continues to climb. So, again, going into next year, a concern or really a catalyst for the market to turn would be a big earnings miss on a mega cap name early in the year. And that's what we see, and that's what we're talking to clients about.
Where else do valuations look a bit stretched?
I mean, you can kind of pull that from a lot of different areas. One sector ETF that we like, which might be unpopular, is the XLP, which is the consumer staples sector. And within there, the top two holdings are Costco and Walmart. And we like that area regardless. There's a lot of individual names, and it's an easy way to gain exposure. But that's you can almost go into any area of the market and see stretched valuations at this point. So it's a matter of just really individual names, and we see a back to basics approach shifting towards value and underappreciated areas and dividend investing. So lagging sectors creates opportunity, and just look at the broadening thing. The S&P is trading at 24 times forward earnings, while dividend growth equities are at 19 times. So there's clearly some opportunities within there.
Tell us about PPG and your word of the day.
Yeah. So PPG, it's the largest paint and coatings company in the U.S., and it operates in 70 countries with over 18 billion in revenues. It's solid core holding at an attractive valuation, but the striking thing, the shares are down 20% year to date. They're currently undervalued. They're trading at the lowest PE since early 2022, but over a 53-year streak of dividend growth, and we're a dividend growth firm. So it's just, it's a good solid core holding and an attractive valuation.
Okay. Tell me about U.S. versus international, just quickly. Where would you be putting more of your money to work next year?
Definitely U.S. I mean, even though valuations are stretched, I think regardless, the U.S. is dominant. And we're staying with that theme, and it's more, we're looking at flagship U.S. companies.